Let's talk about the retail investor. Investing activity has been growing exponentially, with retail investing flows rising by about 50% from 2023 to early 2025. That's according to new research from JP Morgan. From meme stock frenzies to the expanding influence of social trading platforms, retail investors are no longer on the sidelines. They've become a powerful and disruptive catalyst. Joining me now with more on how retail investors are redefining market power, we've got Dan Ives back with us, Wedbush Securities Managing Director and Global Head of Technology Research, known for his bold outfits, as you can see, and big calls. And we got Eric Jackson with me here, EMJ Capital founder, president, and portfolio manager, and leader of his self-proclaimed Opendoor army. He's become a retail expert as well. Guys, thanks so much for being here. And obviously, we've seen a paradigm change from the financial TradFi, as we call it, traditional finance industry, towards retail investors. It's become sort of more accepted. They've been more courted. But Eric, I want to start with you. What do you think that traditional finance still sort of misunderstands about the power of that retail investor?
I think the retail gets a bad rap. I think the perception is they're stupid, dumb money. I mean, that was the name of the movie from GameStop. They think that they're going to lose their shirts. They think Wall Street thinks they know better. They think to protect the stupidness of retail, they should just pile into ETFs, pay a few bips to Vanguard and in the S&P 500 and not even try to kind of find these outperforming stocks out there. And when they see certain stocks rise and go up 100%, 200% or whatever, they immediately don't trust that, and they sort of talk it down, and they want to lump Opendoor as a so-called meme stock, which is sort of trashing the company. It's sort of like a put down on it. So I think there's a lot that Wall Street misses. Retail doesn't miss it, though. That's the point. They are a lot smarter than what they're given credit for.
Well, and it's also interesting because we have seen some executive teams at companies start to try to explicitly court those investors more now. Do you think that's the right move, or do you think we're going to see more of that?
Absolutely. I think Alex Karp, and Dan knows this. I mean, he set the bar. I mean, he really, he was first really out there with video earnings calls. He was taking questions from retail on the earnings calls, treating them as importantly as he was the sell side analyst, and thanking them and kind of acknowledging them, which is really oftentimes all that they want. That sort of recognition and appreciation. And but obviously he had a great company. He is a great master communicator. So you can't separate that as well. I mean, just courting retail is not going to do it. You've got to have that underlying story to go with.
Sure. Dan, I'm curious what you think, right? Do you think that there are still things that are sort of underappreciated and misunderstood about the retail investor? Because what Eric is saying is true, but there has been some progress made, I think, since the sort of meme stock explosion at the beginning of the pandemic, for example.
Yeah, look, I think Eric makes great points, as he always does. And look, the reality is that retail investors used to be at the little kids' table at Thanksgiving, and you give them a little cookie. Now they're at the adult table. They're front and center, because if you look from Palantir to Robinhood to Tesla to so many other examples, I mean, everything Eric's doing on Open. Look, this is a very important investor class that's very informed. I mean, I'd say some of the best conversations that I have on many names are with retail. I mean, there are many retail investors that understand Tesla better than institutional investors in terms of the autonomous robotic future. Palantir, right? I mean, you go back to early days, the believers in retail. Institutional, they laugh, when this stock was a teenager, and then they're crying when it turns 100 and screaming from the mountaintops, 200. My view is it's institutional and retail, but you have to pay attention. Retail has become just a force in this market.
Dan, I'm curious if you have an anecdote or if there's a particular retail investor interaction that you've had. I mean, you travel constantly. Is there a particular interaction that maybe stands out to you that is particularly memorable to you in your recent travels?
Look, I would just say that, like, when I'm, traveling around the world, you realize, like, retail investors will ask questions that usually maybe only the most sophisticated institutional investors would have asked 2-3 years ago. And I mean, there were some moments, like, I'm sitting in Thailand and Korea, and meeting with retail investors that basically have theses on Palantir and Tesla and Open and many other names that are those are not mean. We're talking about sophisticated investment thesis that they've built, and their investment clubs around the world, social media. If you look even on Palantir, there's many that have been well ahead, and I think have had spread, really spread the message.
Let's take a little bit of a step back. Eric, for people who aren't as familiar with you, yes, you sort of have gained some notoriety this year for your advocacy around Opendoor. But for people who are not familiar with your background, I mean, you've been at this game for years as a hedge fund manager and as a sometime activist. What happened this year? What changed for you that brought you to this point?
Well, I've always been a tech investor, and but earlier this year I decided, hey, one of our biggest successes at my hedge fund in the last couple of years was that we got into Carvana a couple of years ago, early on, after it had dropped from $400 to $3.50 in December 2022, and then it sort of started this road back, and they recently eclipsed $400 again. I got in at $15. Our AI model flagged it at $11.
Eric's paying for dinner.
So basically, earlier this year, I was meeting with our engineering team and saying, hey, we got to do more of this. We're building all kinds of different models to do predictions on earnings events and all this. Let's just find more 100 baggers. And so that led us to discovering Iron and Cypher earlier this year, sort of when they were like $9 and $3, still seen as Bitcoin miners, sort of not as sort of next gen AI, HPC,
Neo cloud, if you will.
Neo clouds, yeah. Right. And then from that, I noticed immediately the retail responded to that, and this notion of the next Carvana, I missed Carvana, I'm not going to miss the next Carvana. There was definitely FOMO out there. People were kind of bored of the Mag 7. They were just sort of looking to go out further on the risk curve for sure. And then a lot of people were asking me, hey, I remember Eric you used to talk about Opendoor. Whatever happened to Opendoor? And that sort of sparked my reinvestigation of Opendoor. They were like 50 cents at the time. They hit a low of like 51 cents in June of this year. I got in the 70 cents range, and then went public with my thesis in mid-July in 80 cents, sort of high 80s, 88 cents or something like that. And immediately it took off, and there was just this palpable energy. It was global, sort of to touch on something Dan said. I was getting messages from Mongolia, Antarctica.
Right.
I have there's a crew of fishermen in the middle of the Bering Sea that were out on a 10-week, fishing for cod. Captain Mike of this fishing vessel was on Starlink buying Open, taking all the 60,000 that he had made in the past 6 months fishing and going full portfolio into Open, and encouraging the rest of the Open army. So it's been a wild ride, international, hunger amongst the retail in kind of finding the next big thing, and it's been fun to be a part of it.
All right, well, we're going to just pause for 1 second because we're going to send it over to Ali Canal in the Social Center with some audience questions. I don't know if Captain Mike is writing in and asking any questions here today, Ali, but who do we hear from?
From our Yahoo Finance social media audience, and this one is from Benjamin, and it's for both of you guys. He asks, what investing knowledge have you given away for free that people just don't seem to listen to? Eric, we can start with you.
Well, I think most people do listen when I try to give advice. I would say, one of the things that I've been trying to stress with retail, and I struggle this with myself, is controlling your own emotions as a trader. It's one thing to have this sort of, thesis that Opendoor is going to 100x, right? But that sort of masks the volatility that you live with, day to day, week to week. Sometimes there can be massive drawdowns. Open right now is on a big run since earnings of last week that we're seeing as successful. So it's been up every day since. But before that, it hit a peak of almost $11, and then got as low on the recent market pullback as below $7. And so on those days, I'm constantly flooded with DMs from people saying oh my God, is the magic over? What have I done? Do something, Eric. Tweet something. Make it stop and all this kind of stuff. And you have to teach them that just controlling your own emotions is often the most difficult part of investing sometimes.
Dan, what about you?
I mean, look, traveling around the globe constantly, and obviously from social media, we're transparent. Like, to me, it's really like it's passing it forward and really making sure the information flows there, whether it's for our clients or for retail investors that follow me. I mean, that speaks to like my ETFs. It speaks to everything that I do. What I say here is the same thing I'd say if we bumped into each other in an airport.